In this video, I'm going to break down my exact candlestick confirmation strategy that allowed me to hit my first ever 10K month last year in 2024, allowed me to move to Thailand at 20 years old, and this year, I'm probably well on track to make over $10,000 or more every single month using the same strategy, okay? It's all been done live. I've got a community where I tried, and by the way, my entire trading journey from university to moving to Thailand to getting payouts has literally all been documented on TikTok and YouTube and Instagram, but this strategy is safe to say changed my life. However, it wasn't always like this. I spent about 3 years copying signals and trying to learn how to trade, but I never really took it seriously until I actually found out about this strategy and how to actually enter properly using candlesticks. So in this video, I'll be giving you all of the gems, all of the tips I know to master candlesticks, and make sure you follow along. Make sure you watch the entire video. Make sure you make notes, because if you don't make notes and if you don't actually take the time to watch the entire video, I can't guarantee you're going to even see success in trading, because if you can't sit through a 20-minute video, then there's no hope for you, okay? So before we get into it, make sure to like, comment, and subscribe. And now let's get into the video. Okay, so the first thing we need to understand is that there's only 3 different phases the market can ever be in, okay? That's accumulation right here, that's manipulation right there, or distribution right here, okay? Those are the 3 things the market can be in. Now, the market will either be accumulating, manipulating, or distributing, and that essentially means either building up orders, manipulating those orders, or going in the direction after those orders have been taken out of the market and continuing in where it wants to go, okay? And it happens in order, okay? If there's distribution, for example, then after that, then will come accumulation, okay? So they happen basically in order. It goes accumulation, manipulation, distribution, then it will go back to accumulation, then back to manipulation, then back to distribution. Once the distribution's happened, then there'll be some sort of accumulation again, then there'll be more manipulation, then there'll be more distribution, and it happens in order. So the first thing you need to understand is that everything is a sequence, okay? The market moves in cycles, and the reason why there needs to be accumulation, manipulation, and distribution within a cycle is because that's how money is essentially made and manipulated into the market. People are going to be buying, then it's going to be manipulated, and then the market will distribute where it wants to go. Okay, that's how the market moves. It doesn't just go up in a straight line. It doesn't go down in a straight line. There needs to be people losing in order for the market to go where it wants to go, essentially, right? In order for the market to move, there has to be somebody losing on the other side. And that's where the manipulation comes in, which I'll get onto later on in the video, but you can see if I highlight the manipulation in the middle, okay, that's where the orders are essentially taken out from the market. That's where the liquidity is taken out from the market. And then after that's taken out, then the big moves can happen, okay? And you can see here, basically the example, which I'll be showing you guys in a second, once the liquidity has been swept, that's when you see the move. And that's when you want to be able to get onto the charts. So now let's have a look at this example here, okay? This is going to be the bullish example of accumulation, manipulation, and distribution, so that you can understand basically what I'm showing you right here. Now, the first box right here isn't part of the sequence, but it's essentially just showing you the end of the last sequence right here, okay? This would have been how the last cycle ended, and this right here would have been distribution of the previous cycle. Okay, now this will make sense once I explain the cycle first. If I just go and copy all of this, right? Imagine right here, if I can do this, right? You see the exact same thing would have happened before this cycle. Okay, that's how it works. The market will move and repeat its movements over and over again. So imagine right here that I'm just showing you the start of a new cycle after a previous cycle finish, okay? So let's go back now to the first example. And this will all make sense, by the way. Just stick with me, okay? Because it's super important to understand this. It's super important to understand that the market moves in cycles, okay? Nothing is random. Everything is somewhat repeated, and you can always understand what's going on if you understand this to a good level, okay? So the first phase, accumulation. Let's now go and highlight this, okay? The first phase right here is going to be accumulation, and you can see right here, if I draw this out like this here is accumulation. This will typically be happening with an Asian session as well, which I'll get onto later on in the video as well, okay? I'll be going onto the chart, showing you live examples of this so you can understand what's going on right here, okay? This here is Asian session, and this here is accumulation. It's the build-up of orders before the move happens in the market, okay? And this typically will happen in Asian session because Asian session is likely to consolidate. So people also call this, for example, consolidation, okay? Instead of manipulation or instead of accumulation, story, okay? They're gonna call this section right here consolidation, but I'm just gonna call it accumulation. It's the same thing, okay? Orders are accumulated right here. Now, why do we know orders are accumulated right here? Well, this can be shown to you in the form of liquidity, such as equal highs or equal lows, or trend line liquidity, right? or any sort of session liquidity, for example, Asian range liquidity, right? Wherever there's highs and lows in the market, there'll be liquidity. And as you can see right here on this image, we've got lots of equal highs right here, okay, in this box. And that there is your liquidity. That there is your build up of orders to the upside, right? Okay, that's essentially what this is showing you. There's a lot of liquidity resting above all of these highs here. And also there'll be a lot of liquidity resting below these lows right here. Okay, that's what this is showing you. Now, the reason this is important is because these orders eventually need to be taken out, right? Eventually they're going to be taken out. Eventually the market is going to go and take out one direction and then continue its move, okay? And that's what you need to catch. So that there is the accumulation phase. And like I said, this normally happens in Asian session, and then the actual manipulation happens in London session, and then the distribution typically happens in New York session, okay? And it's super important to understand that this stuff happens at different times in the day as well, right? You don't just look for this every single second of the day. You look for this at certain times of the day to find the highest probability that this is going to happen. Now, I'll get onto all this later on, but first you need to understand what's going on. So that there is the accumulation. Now the manipulation, okay? Let's get rid of this and let's go and show you the manipulation side of things, okay? So as you can see, and it's very important as well to understand what the candles are doing, okay? The candlesticks are what make this strategy so good. And I'm going to dive one step deeper. I'm not just going to show you accumulation, manipulation, and distribution. I'm going to explain to you the importance of the candles that make up this accumulation, manipulation, distribution, okay? And these candles are known as bullish or bearish pin bars. And they essentially grab liquidity from one side of the market and then reverse it to target the other side of liquidity. And we can see this right here, okay? If I zoom in and actually get rid of this box right here and actually move this box a little bit more to the right, this candle right here, I'm going to highlight it for you guys here. This candle is the candle that we want to focus on, okay? This here is your bullish pin bar because the market is trending higher. So this is a bullish pin bar. And you can see it grabs liquidity. It takes out the accumulation from the downside, takes out all of these orders, takes out all of the liquidity that would have been resting below these lows here, i.e. Asian session, which I'm going to go ahead and draw out right here. Asian session, like this, okay? Let's imagine this is Asian session. It grabs the Asian session lows. The candle then starts to reject from here. And this rejection is super important as well because the rejection is what shows you that the move is actually taking place. If there's no rejection, you don't take the trade, okay? If there's no rejection candles on the 15-minute, for example, or the hourly, you don't trade this setup. Rejection candles and seeing wicks, like this one right here, okay? They tell you the market is actually doing what you want it to do. They tell you the market's actually reversing. And if you don't see these things, you shouldn't take the trade in the first place, which I'll show you later on in the video, okay? But the first thing you need to understand is that the market on this candle right here has grabbed the liquidity from this accumulation phase. So it's taken one side and now it goes and targets the other side of the market. That there is manipulation, right? And the reason it can now target the other side of the market is only because it's taken out the other side of the market first. The market, I'll show you another example, right? It's going to look something like this. Imagine you're in a accumulation phase that looks something like this, okay? So you've got highs and lows in the market. Like I said, this right here is probably going to be Asian high. This right here is going to be Asian low. And then inside of this range, you're going to have a lot of, you know, highs and lows in the market that essentially build up Asian session. And it's going to look something like this, okay? Now, what the market does is it's going to have to take out one side before it can go to the other. That's just simply the reason why this works so well, okay? And the reason why this works is because there's liquidity resting above these highs and these lows. If you understand liquidity, then you'll understand why this happens. If you don't understand liquidity, I can make videos on this in the future. But essentially, this here's a trend line, and every single time price touches this trend line, people are going to be selling from this trend line to now target the lows, okay? So they touch it here, they sell. They touch it here, they sell. They touch it here, they sell, okay? And equally, the opposite happens to the other side of the range, okay? They touch this side here, they buy. They touch this side here, they buy. They touch this side here, they buy. It's getting a bit messy, but you get the point. Every single time the market touches this trend line or this high point or this resistance, whatever you want to call it, people are selling, 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 selling. And what this means is there's a massive buildup of stop losses, okay? So many people have their stop losses at this area here, which means there's liquidity resting above this high up here, okay? And the same thing goes for down here. There's liquidity resting below here, and that's why the market will manipulate to take it out and then target the other side of liquidity up here, okay? This is a total mess, but hopefully you guys understand what I'm saying, okay? It's very important you understand this, because this is what builds the market. This is how you win in trading. You have to understand this stuff, okay? So that there is a quick example of what the actual accumulation phase is like. And now let's go back to here, okay? As you can see, the manipulation happens here, and then we target the high or the other side of the accumulation, okay? And then the distribution. So let's go over it one more time. We've seen the accumulation right here, like this. Then we see the manipulation here. Now we distribute to the upside, and that is where you're going to look to take a trade, okay? Once you can identify the accumulation and the manipulation, that's when you enter the markets. That's when you can now target your buys, because you know the manipulations happened down here, right? And that's your confirmation to now enter the trade. Until this manipulation happened, there's no point even looking to take a trade in the first place, because you've seen no confirmation that the market's going to reverse. So you have to see this first before you look to take a trade. And then that's when you can take a buy, something like this, whatever, right? And target the high up here, or target some sort of liquidity that maybe is resting somewhere up here, for example, right? Let's imagine there were some sort of highs up here. Then you can target that, and that is what you're going to catch. The distribution of the move is what you want to be catching, and that's how you're going to be able to catch these big moves. Okay, so hopefully this makes sense. If this makes sense, before I get into the examples on the charts, drop a comment and let me know if this is making sense, so that I can make more videos like this, okay? Because this is a super interesting, detailed video, and it's super important you understand this stuff, okay? And I can happily make more videos on this. Now, here's the bearish example as well. You can see right here, okay? We are basically doing the opposite, okay? We first of all are gonna accumulate here. So accumulating orders here, okay? We've got liquidity resting above this high here, like this, which I can mark out like this. We've got liquidity resting below down here, like this. And then we manipulate higher, taking out these orders up here first. And then once that's happened, okay, then we are able to distribute lower, and that's the move you're going to catch. So in the bearish example, we take out the high first and then target the lows. And in the bullish example, we take out the lows first and target the highs. And that is your accumulation, manipulation, distribution, okay? That's essentially what this is. So my thing's messed up a bit here, but you guys should understand what I'm talking about, right? And then the distribution there is when you will obviously take a sell like this, and you can target the Asian low, you can target some liquidity that might be resting below here, okay? And that's essentially how it looks on the charts, on the candles. Now, I want to actually take one step deeper into this, okay? One step diving deeper and explain to you the importance, yet again, of this candle right here. Okay, this candle could be shown to you maybe on the 15-minute chart. This could be on the hourly chart. This could be on the 4-hour chart. But it's so important that when you're looking to take the trade, guys, you are seeing this wick rejection here first. You need to see this rejection first, because if you're not seeing this rejection, if, for example, okay, the market, when it takes out the liquidity here, when it does take out the accumulation, the candles keep on going lower and lower and lower. For example, if I change my thing, right, if it keeps on going lower and lower and lower like this, right, imagine the candles keep on going lower and there's no sign of rejection, then this entry model is not valid, okay, because it clearly wants to go and target, maybe there's more liquidity, for example, resting down here, okay, maybe it wants to go and take that out first before reversing, okay. And the way you can actually understand if that's happening is literally by looking for these rejections here, from the wick rejections, from looking for these bullish and bearish pin bars, which show you that the market is reversing, okay. Without seeing these rejections, you don't take the trade. It's only when you start to see candles pushing lower, okay, forming the low wick like this, and then once they push down here, rejecting and closing up here, that's when you can start to look to take the trade, okay. Now this right here can be shown to you on the 5-minute, it could be shown to you on the 15-minute. I wouldn't really look for something like this on the 1 minute, because on the 1 minute it's quite a low time frame. But if you saw something like this on the 15-minute, where you close like this, after seeing the manipulation, for example, of Asian session, let's say is like this, you've seen it take out the Asian session low or the accumulation phase, right? Then you see these rejections here, maybe on the 15-minute from, for example, maybe a demand zone down here, like this. That's when you can now consider taking a buy here, okay? That's essentially what we're looking for. And this is all made up, yet again, of accumulation, manipulation, distribution. This is probably my most important video. Like, if you are gonna watch any videos of mine, watch this video, because this is value, bro. This is insane value that people aren't gonna give you, okay? So I'm gonna take a break now, and then we're gonna jump onto the charts, and I'm gonna show you a few examples of this live and go over a few trades that I literally took live on the calls in my community and break them down for you. So let's go into the charts. All right, so here is the charts, and I'm just gonna literally just go and show you random examples, okay? And you're gonna see this happens all the time. So let's first of all have a look here at this example right here. Okay, this is on Tuesday, and this is actually last week at the time I'm recording this video. Okay, so here is your accumulation. I'm gonna mark this out as orange, okay, like this, accumulation right here. Now, why is this accumulation? Well, first of all, it's within Asian range. So you can see Asian range right here didn't really have much volume. It basically just accumulated orders, okay? Asian low is down here. You can see by this Asian range indicator. And by the way, the Asian range indicator I use is Asian range Nikko 948. And these are my settings. Screenshot that right now. And there you can see Asian low is down here, okay? And then Asian high is up here above this black line right here, okay? So that's essentially your accumulation zone. I've extended it to the left just to make it a bit more obvious. And you can see right here, we've got highs and lows in the market. Essentially what the market is doing is literally just going like this, just basically just forming highs and lows, right? Accumulating orders from the upside and the downside. And eventually, as we know, okay, there's gonna be manipulation, right? And then there's gonna be distribution like this, okay? So let's now go back and show you the example, right? So there's your accumulation. Here is the manipulation. You can see, what do? We go lower, and we then go towards Asian low, taking it out, tap into a demand area down here, okay? Which I'll mark out like, like this. Tap into a demand area down here, and this here's your manipulation. This is what you wait for. You wait for this to happen. You don't take the trade before this manipulation has happened. A big mistake people make is they might look to take, for example, a buy before the manipulations even happened, and they lose, okay? And that's not what you want to do. You want to wait for the manipulation, wait for obvious manipulation as well, right? Clear manipulation like this. That's what you want to see, okay? And then you can look to take the trade in the other direction, such as the distribution, which will be this move up here, okay? And I'll mark it out in green. Let's mark this manipulation out in red, okay? That is essentially what we're seeing on the live charts. Now, let's go one step further and have a look here on the different time frames and look for clear rejections for confirmation that this is happening, okay? So, what did we do, okay? If you have a look here on the 30-minute time frame, okay, we came lower into this demand zone, and only really around like this point right here, you can clearly see we were getting that reaction we want to see. We were getting wick rejections from this demand zone, which is your confirmation that it might be the start of distribution, okay? So many people are going to tell you, oh, accumulation, manipulation, distribution, but it's about understanding when it's likely to happen, and that is from this candlestick confirmation right here. These wick rejections from this demand zone are your confirmation that this move is likely to happen, okay? So that's on the 30-minute. On the hourly, let's see how it looks on the hourly. The hourly wasn't really that good. You still had some reactions from there though. 15-minute, let's have a look, see what we got. Right, on the 15-minute, it was okay. It wasn't the best example in the world, but you can see we still did have those wick rejections down here. Okay, we still did have a bullish candle close here. And once we had this bullish candle close from this level right here, that's probably when I would start to consider right, that maybe we are seeing the start of a distribution phase, okay? Because you can see we've now manipulated lower down here. We've started to see some rejections. We're starting to see bullish candles form. And now we can expect maybe we're going to see a distribution, and that's what ends up happening, okay? So that's the first example. Let's go and find one more. Ideally, a selling example would be good as well. Now, this is actually another example, okay? Literally, the day before, the same thing happened, okay? Now, you could have actually taken a loss here. However, I'm going to teach you how to avoid a loss as well. But let's have a look here, okay? So let's actually replay the chart so I can do this live with you guys, okay? So as you can see, here is your accumulation phase, okay? In Asian session, you can see we're just not really doing too much, sort of just accumulating, okay? Just kind of staying still and just going up and down, up and down. And of course, that means we're going to have Asian high up here, right? Like this. And then we're going to have Asian low below here, okay? And now what we do is simply wait for one side to be taken out, and you want it to tap into a point of interest, essentially, an order block, a supply or demand zone, okay? A fair value gap. That's what you're looking for. So what I would do is I would draw out this area here, okay, as your first supply zone. Now, I've actually made a video very recently on order blocks, supply zones, demand zones, everything, which is going to be somewhere up on the screen right here. So check that out after this video, okay? And then I'd also draw out the fact that we have another supply zone somewhere up here, because as you can see, this area caused a massive move to the downside. So I'm going to mark it out very roughly like this, but you can see this area up here broke past these lows here, giving us a break of structures to the downside, which left massive fair value gaps here, okay? And that's your confirmation that this zone here is a very high probability zone, and I'd be looking to trade from there, okay? So let's now go and see what happens, okay? And remember, we want to wait for confirmation, okay? So let's have a look. We end up pushing higher, okay? And keep in mind, we don't actually want to trade this here, okay? Which is a part of the strategy which I need to, you know, get more videos out on in the future for, because the strategy goes so much deeper than this. This is literally like one part of the entire strategy. But the reason why we would avoid this is because simply it's too early in the day. You can see right here that this move here happened around 7:30, okay? So you wouldn't really trade this because it's too early. London session starts at 8 a.m., right? And even prime London session starts around 8:30 to 9 a.m., right? That's when you want to see the moves. Around 9 a.m. is like perfect timing, okay? So that's why I didn't trade this. And that's why my community wouldn't have traded this either, because they understand this is not the strategy. Well, it is the strategy, but also you need to improve the strategy, right? So that's why you wouldn't have traded this. And that's why you would have waited for this supply zone up here. And then, as you can see, when we come into this supply zone, look at what happens, okay? This right here is your rejection. This is when you start to look into the market. This is when you start to consider taking the trade. And as you can see, rejections there, maybe on the 30-minute as well, you get some rejection candles. Not ideal, not amazing, but still they were there, okay? And you can see they're closing bearish now, which is when you can look for an entry, right? And if you know my lower time frame confirmation strategy, that's how you would enter this right here, okay? And then you can see, boom, all the way down. And that right there is your manipulation phase, pushing higher. I'll mark it out in red. And this right here is your distribution, and that's what you would have caught right here, okay? So that right there, guys, is a perfect example of how to do this, okay? Oof, the value in this video is insane, and hopefully you guys appreciate this video. If you do, let me know in the comments and I will make more like this. And also, if you are wanting to learn with me and trade live with me every single day, like the 100 people in my community, then you can join the community using the link below in the description. You can apply and potentially have the chance to trade live with me every day, learn this strategy in so much more detail, and become a funded trader. Change your life. Start to make $10,000 or more every single month from trading, and you can do it because I've helped people do the same. Clev is now over 500k funded. I'm going to put his certificates, I'm going to put his testimonials, everything's probably going to be on the screen, and you guys can check it all out on my website, see it for yourself, see all the testimonials, and if you're looking to get involved, hit the first link below in the description. Other than that, guys, thank you for watching this video. I hope you enjoyed it, and I'll see you on the next one. Peace.